Adam, we got Phil on the line. What do you want to ask him?
If you're looking at a market that's not in your backyard, what do you look for in a market, or how do you decide on a market to invest in?
I think that the key to this whole business is being a master of valuation. It's not, can I get the money? It's not, am I great at construction? It's truly understanding when value presents itself to you. So maybe trim it down to your highest priority target or two and go really deep in where you think you want to be. And that way, when something pops, you can grab it immediately. And it's not, well, let's go throw this into the analyzer. Well, let's talk to a property manager. You already know.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Four Oaks Capital. I'm very excited for today's show. It's another one of our Ask the Expert episodes. We got two great people on the line with us today. We got Phil Capron and Adam Lacey. So first of all, Phil's coming on as our experienced investor. Very happy to welcome you, Phil, to the show today. Thanks.
Hey, Brian. So glad to be here with you, man. We've known each other for a while, and I'm honored that you asked me to come hang out with you today.
Yeah, absolutely. Absolutely. Yeah, it's been fun. I mean, it's been a couple of years now that I think I first met you. I want to say 2018, maybe at a Michael Blanc. Yeah, something like that. Yep. But it's been a lot of fun. I've very much enjoyed knowing you and keeping in touch over the years. So that said, why don't you tell us a little bit about yourself and give us an idea of what got you into real estate investing?
Sure. So I jokingly say often that I got into real estate the same way as everyone else, which is doing a tour in the Navy Special Ops, being an ocean lifeguard, playing poker professionally, and traveling around the country in my punk rock band. But obviously, none of that's entirely true.
That's how everybody does it, right?
That's right. If you didn't do all those things, just forget it. Hang it up. Turn the episode off. Seriously, when I separated from the military, I knew that real estate was something that I wanted to pursue. After buying my first house using the VA or Veterans Administration loan when I was on active duty, and having some buddies rent rooms and living rent free, I said, "There's got to be something more to this. Can I rinse and repeat this process?" So, unfortunately, I sold houses for a handful of years, flipped a bunch of houses. And finally, the light bulb went off, and I started buying things to keep, other than a couple single families and condos. And so over the last handful of years, I racked up a little over 500 total units that I've sponsored, and the current portfolio is about 430. Working on selling some things now, and just positioning for the future. So that's it in a nutshell. Don't want to take too much time, and just kind of want to get into talking with Adam,
Yeah. So cool. So, I mean, incidentally, for people in the military, that VA loan is the starter for a lot of people. And if I remember right, you wrote a book that talked a little bit about that too, right?
I did. Yeah. 2019, I wrote Your VA Loan and How It Can Make You a Millionaire, because that was, the starting place for my journey. And, I'm not sure that everyone necessarily has the same ambitions and wants to devote their professional life to real estate the way that I have. But I think that it's going to do a world of difference for service members who do it rather than those who don't. And even after you make the decision to buy a home, there's some things that you should know. So I recommend highly that you pick up my book. Amazon, all the proceeds are going to the Navy SEAL Foundation. Every Veterans Day, I turn them over to that group that I think the world of and support. Or later in the show, when I give you all my info, there's a digital download available for free on my website.
All right. Awesome. Yeah. So definitely if you're military or eligible for the VA loan, definitely reach out, grab that book. I did see a copy, several years. I think you sent me a copy to review before you published it, but I did read the pre-release copy. It's solid. So, highest recommendation for that if you're eligible, but, that said, let's talk about, one of the, 400 or so units that you have right now. Can you tell us about one of the deals you've done?
Sure. So since you've got a great concept for this show, by the way, is trying to bring up the next generation. And so I'll go with my first deal. It was a 13 unit it's not even really an apartment building. It's 4
Mhm.
duplexes, a triplex, and a couple of single families on 3 contiguous lots
Okay.
in Norfolk, Virginia. And when I was working as a real estate agent, I had, I was showing that to a guy who owned, a handful of units in the marketplace. And I thought I was
Mhm.
going to, set myself up for a fat commission. I was let down when he said that he wasn't interested in the deal. The other broker came back to me and said, well, what if, the seller owner finances it for him? Would he be interested? And, my buyer
Mhm.
said no. So the other broker asked, well, do you know anyone else that would buy it if it was seller financed, or a lot of it was seller financed?
Mhm.
And I said, well, would he sell it to me? He said, I don't see why not.
Yeah.
So long story, a little shorter.
Mhm.
The purchase price was 910,000. We brought 100,000 to close, and I'm exiting at the end of this month for $1,075,000 after, I guess, about 4 years.
Mhm.
So for a first deal, it's not terrible.
No, no, no.
Mortgage balance is 775. So, I'm not sure exactly what the true profit is on the deal, but it's cash flowed over the years, and I've learned some great lessons, and it gave me the courage to go and buy almost 500 more. So
Yeah.
that was where the real payment was in that deal.
You know, my partners and I have talked about this a lot. On our very first syndication, we ended up doing what a lot of people don't. We did it like a 90-10 split to make sure our investors would make money. And we're not making almost any money on that at all. But when we look at it, the same thing you said, we have learned so much from that it was worth it. And we knew that we would. So just to make the numbers work for the investors, we took that 90-10 split. And I like that you brought that up. That first one, the first one gets you on the map. It's a learning experience. Doesn't matter if it's a home run. It's, if it helps you grow and get to the next level. So
this will sound super cliche, but I truly believe you need to work to learn before you work to earn. I'm not sure who said that. So we'll say Abraham Lincoln, or
I was
somebody
going to
like
say
that.
Phil.
Yeah.
Phil said that.
Definitely not. Somebody important said that. I just don't know who to attribute credit. But
Yeah,
it's so
woo.
true. It's so
Yeah.
true. And my second deal was a grand slam home run. So proven concept and getting in the game and getting with the right people, like you did with Four Oaks. That's sort of the key, in my opinion.
Yeah,
anyway.
absolutely. And that first deal we did is what brought the team together, and I've been very grateful for that since. But so that said, something I'd like to ask everybody is kind of a question about motivation. What's your big burning why?
So when I got out of the military, I said that I was never going to work for someone else again. There might have been a little resentment there. That's a whole nother topic. The fact of the matter is I'm just not employable. So if no one else is going to let me be the boss, I've got to do my own thing to be the boss. And, that's what I've done since separating. And, I've taken my lumps and, learned some lessons, learned before I earned. But it's worked out really well for me.
Yeah. Yeah. And I definitely feel, I think I know where you're coming from. I mean, I spent a little longer in the military, and you have some good bosses, you have some bad bosses, you had good experiences, bad experiences. And I was tired of rolling the dice, and I'm in the same spot where I'm not going to work for anybody again either. I'll work with my partners, but I'm in the same boat 100%. But
let me take another stab at that and try to be slightly more articulate as it applies to the military. There's certain wickets you need to hit in order to promote in the military. And it doesn't matter how good you are, it's just not going to happen for you until those benchmarks are met. It's the same thing with many people's jobs in corporate America or wherever they happen to be, a W-2 employee. I don't love that. I like the idea of sinking or swimming on my own based on my merits. And not some predetermined path.
Yeah. And if you look at the military in general, and a lot of employers have similar structures, but you look at the pay chart and exactly what you're going to be making for the rest of your career, and early on in my career, before I really understood how investing worked, I would be like, man, 2 more promotions or 2 more years. And wow, look at that money that I'm making. But you know, the last couple of years when I realized that that was really a ceiling more than a, you know, I'm earning more and more every year, that's when it really started hitting home with me. And I really started realizing that there's a better way for me, you know, that way's fine for a lot of people. And, you know, no disrespect to anybody who takes up that route I did for 20 years, but yeah, I kind of like the work at your own pace, make as much money as you earn approach. So
It's a trade-off. It's a trade-off. They call it golden handcuffs for a reason. You know,
yeah.
and for a lot of people, it's not golden handcuffs. It's exactly the life they want to live, and that's fine. It's
Mhm.
just not the life that I wanted to live.
Yeah.
So
Yeah.
no
And like,
disrespect, like you said.
yeah. I mean, 20 years is what I served. I think for the first 17, that's exactly the life I wanted to live, you know, and it was the last couple that I started thinking about, you know, other ways to live. And, you know, I'll be honest, the last year was painful because, you know, I started getting a lot of traction in real estate, and, you know, it's just really painful to stay in that, the golden handcuff job. But anyway, that said, what's next for you, Phil?
So I've decided to sell just about all of my holdings right now
Mhm.
because it's a pretty good time in the market, and consolidate under my new company, Mission First Capital. So I know we're going to
Mhm.
talk about that, you know, a little bit later in the show. So don't let me
Mhm.
kind of jump the gun on that. But yeah, I've gone from the syndication model, the JV model, the independent ownership model to the fund model. So
Mhm. All
looking
right.
forward to talking that a little bit later.
Yeah, I know a lot of people are moving towards funds, so I'm excited to hear what's coming up for you. All right.
Cool.
Well, that said, let's introduce Adam to everybody. Adam, welcome to the show today.
Hey, thanks for having me on, Brian. Phil, nice to
Yeah.
meet you.
Nice to meet you.
All right. So Adam, do me a favor, or do us all a favor, and tell us a little bit about yourself. You know, where you're from, you know, what you've been doing, and what got you into real estate.
Yeah, so I grew up in Michigan, got a degree in civil engineering, spent the first part of my career mostly as a design engineer, designing stormwater systems and doing floodplain permitting and different kinds of flood mitigation systems. And frankly, never really liked it. You know, it was this thing even from year one. It just didn't really provide me any excitement or enjoyment. But like a lot of people, you know, I went through the trouble of getting a degree, so I thought,
Yeah.
well, now I'm trapped in this thing, and you know, frankly, it was depressing at times.
Yeah.
But still, I just kind of kept plugging away, thinking, well, maybe when I move up to management, it'll get better, or when I do this, maybe it'll be more enjoyable. And of course, it never did. But I kept plugging away.
Mhm.
I think like a lot of people, and then frankly, it took a life event for me to kind of circle back and reevaluate. So just to paint the picture, this was November of 2016.
Mhm.
I had a 2-year-old at the time, and my wife was pregnant with our second child, and we
Mhm.
found out that the 2-year-old had a tumor in his bladder, my son Nolan.
Ooh.
And like, yeah, Brian, I know you have kids, Phil, I'm not sure, but I mean, I'm sure anybody can
Yeah.
understand that, like, it hits you like a ton of bricks, you know. I mean, there's nothing more devastating feeling than that. So, you know, not only do you have to deal with the stress and the anxiety and just the emotional and mental exhaustion involved with that, but it's
Mhm.
also time consuming. I mean, our life
Yeah.
just turned into, you know, we were working 40 hours a week, you know, whatever, hanging out with our friends on the weekends. And now it's all of a sudden it's radiation treatments every day,
Yeah.
chemo at least once a week for 43 weeks. A lot of weeks it was 5 days a week. And it was just so time consuming, you know. Of course, all I want to do is be there with my son, but of course I have to
Yeah.
work too, right? I mean, I have not only do I have my insurance through my W-2 job, but I have to put
Yeah.
food on the table and pay the bills. So I just, you know, my work was somewhat flexible with me, of course, but there was limitations to that. You know, I couldn't
Yeah.
make all the appointments. We had to hire a nanny. Thank God our friend Dion came aboard and was nanny for us and was able to help us get him to appointments and whatnot. But it was tough, you know.
Yeah.
And then fast forward, he's in remission now. You know, he's been in remission. Yeah, thanks, Phil. He's been in
Yeah.
remission for 4 years or so, and it was tough. But you know, I think going through that experience provided me a couple things. I mean, obviously, there's the cliche reminder that life is short and fragile, and you know,
Mhm.
there's no reason to just, you know, go through the motions. It's more fun to live your life and
Yeah.
find something to do that's fulfilling. And then And then, yeah, the second piece of it is that I knew that I didn't like my career and I wanted to find something different. And I wanted to find something that could provide me not only freedom to, if life happens again, freedom to be where I want to be when I need to be, but also something where I can just feel more energized through what I'm doing and maybe have a bigger impact too. And that's kind of what led me to real estate eventually. I just kind of started looking at different entrepreneurial options and different options. And like a lot of people, stumbled into bigger pockets and just kind of fell in love with real estate and just decided to plug away. And here I am.
Yeah. Just like everyone else, punk rock band, professional poker, right?
Yeah, I forgot to mention my punk rock band.
Yeah. Well, I mean, thanks for sharing that with us. I very much appreciate it. It takes, wow, is all I got to say. I mean, I think you lived one of my worst nightmares. If you look at the things on my list of things that I never want to happen to me, and it's the health of my wife and kids are probably highest on that list. So anyway, thanks for sharing that, and I'm glad your son's doing better.
Yeah, thank you very much.
Yeah,
and yeah, we were very lucky. Everyone isn't as lucky as us. He's okay now. So, but yeah, thank you.
Yeah, I'm sure I know where this question is probably going to go, but we talk about big burning whys. You kind of wove that in and out of your story up to now, but if you could just break that down as simple as you could, what's your big burning why?
Yeah, absolutely. So obviously it spawned by the story I just told for sure, but my big burning why is not only to build a lifestyle that I enjoy, that has freedom and impact, but I also would like to help other people do the same thing. So, and I want to use real estate as my vehicle to build this real estate business up and bring people in, whether it's through partnerships or coaching programs or whatnot, and just help other people kind of just find the life that they should be living.
Yeah. Awesome. Thanks for that. All right. Now we come to my favorite part in the show. Adam, we got Phil on the line. What do you want to ask him?
Yeah. One of the questions I want to ask is, as I'm looking for deals in different markets, I found that I think I've been probably spreading myself a little too thin looking in multiple markets. And I really want to kind of refocus and just focus on one, maybe two markets at the most. But so my question is, if you're looking at a market that's not in your backyard, what do you look for in a market, or how do you decide on a market to invest in?
It's a tough one for me because I'm hyper local.
Okay.
Like everything in my portfolio is within about an hour. There's one outlier that, is a little bit more. But other than that, it's something that I can lay eyes on and visit every week if I want to, just depending on the phase of the project. So I'll take my best crack at the question. It's, you mentioned spreading yourself too thin. I think that the key to this whole business is being a master of valuation. It's not, can I get the money? It's not, am I great at construction or spreadsheets? It's truly understanding when value presents itself to you. One reason I'm very thankful for my residential real estate, teeth cutting, I guess, is, being in the brokerage space, working with investors, and then doing a lot of flipping and, wholesaling myself. I became very good at understanding where there was value. So I guess the advice would be maybe trim it down to, your highest priority target or two, and go really deep in where you think you want to be. And that way, when something pops, you can grab it immediately. And it's not, well, let's go throw this into the analyzer. Well, let's talk to a property manager. You already know.
Yeah. And I'll just add to that, I looked at the markets that I was in, and when I started out, I wasn't in a market that I was comfortable working with. I was in the DC area, very tenant-friendly laws, a lot of things that are not very conducive to multifamily. And I started looking outside of my backyard. And one question that I asked myself is, where are some places that I go to anyway? My wife was born and raised in South Carolina, and it turns out that there was a lot of really good dynamics happening in South Carolina. And for me, that was kind of the trigger for me was, well, if my backyard isn't good enough, where are places that I already go, I already know, and I can have maybe a little bit of a competitive advantage. And so that's what I started doing, is looking at those. And Adam, I think you're smart to narrow your focus, because that helps, just tie in what Phil said. If you are focused on one area, when a good deal comes across your desk, you can immediately say that's a good deal, because I've looked at 20 or 30 or 40 others in the same market. I know for a fact this is a good deal. So.
Yeah, that's great. That's good advice, Brian. Thank you. Another question, I guess, somewhat related to narrowing focus is, obviously in the apartment syndication space, there's a lot of pieces. You got to find the deals and raise the capital and then manage the asset. And I feel like my skill sets, I enjoy the hunt. I enjoy trying to find the deals, and having a construction management background, I think lends itself very well to the asset management, especially managing large rehabs. But like, I'd love to find some kind of partnership or a partner that is really good with the marketing and the capital raising piece. So my question to you is, like, do you have any advice for people like me looking for partners, how to find partners, and more importantly, maybe how to vet partners, what to look out for?
So I've had a lot of partnerships, a handful of JVs, and a few syndications, and so I've seen kind of the good, the bad, the ugly. It's difficult to see how people are going to react in trying situations until they're there. So I would say do a deal with a person before you do like a partnership with a person. So I understand that those words are sort of interchangeable in the way that we're using them. So a deal would be like a joint venture partnership, but I would suggest to do that before you can go and start a company and co-branding and putting a lot of resources together to build something. Just try to see your prospective partners in a few different situations, and ideally some that are not good, because stuff happens in this business that is stressful. And it's nice to know what kind of character you're dealing with before it gets to that point when there's actually money on the line. And I've been blessed to have fantastic partners. I think maybe that's more luck in my situation than any type of skill. But trust your gut, and if something feels wrong, don't do it. I will say that there's plenty of people out there that have precisely the skill sets, the desires, and the infrastructure that you're looking to partner with. And I think what you bring to the table, the actual doing, whether it be the deal finding or the construction management, is critically important. So, don't sell yourself short. Find a great deal, work with somebody with similar values, and they'll see value in you just the way that you're seeing in them to provide the back office type support.
Yeah, I agree with everything. I'll just say the best analogy I've heard is it's a partnership is almost like a marriage in a lot of ways. You want to date and really get to know people, before you get in there. And the way Four Oaks came together is, well, the way I met, Eric Shirley, who was the first person that I met in Four Oaks, was we decided to start collaborating on underwriting. We were both looking in the South Carolina area, and we decided to collaborate. We would share notes, we would share our underwriting, we would share our numbers. Hey, this is what I'm doing here, this is what I'm doing there. But date first and get to know somebody. And I think that's the best way to start it out.
Okay, great. Thanks, guys. Another question, Phil. So how are you currently finding deals in markets? Are you mostly going through brokers and agents? Are you going direct to seller? Any tips on that?
Deals, that's the interesting word in this current market. Very few and far between. I only bought one thing in 2021. And it was solid, not a grand slam, but solid. And that came from a broker relationship. Because I'm so hyper focused in where I am, I see most of what's going to come out as a first look kind of thing. And sellers they're not living under rocks. They understand what's happening in the marketplace. So, if there is an opportunity to get something quote off market, it's not at the prices that we were looking at several years ago. So as a result, I've been more or less on the sidelines the last year. I know people are doing deals or they're doing transactions. Time will tell whether they end up being deals or not. So specifically the brokerage relationships, they come from actually transacting business with those brokers. And even the ones that you may not have necessarily closed a deal with yet, they know that you closed a bunch of deals with another one in the marketplace. So they will take your call and they'll take you a lot more seriously. And it's tough because, you have to do deals before that level of trust occurs. Short of doing that, just being, the standard stuff, being very engaged when they send something out, sharing your underwriting with them, taking them out to meals, going deeper to see what's going on with their interests, their families, their, sports teams, stuff like that. It's all tried and true, but there's nothing better than actually transacting business with, one of those brokers.
Do you have a standard interval? Like you try to reach out to each broker like once a month or once every 2 months, anything like that, or just a case by case basis?
I wish I was that organized. I consider those that I do the most business with to actually be friends. So, there could be contact that has nothing to do with any business deal. It's, hey, do you want to go surfing? Do you want to come over to my beach house and have some drinks? Would you like to, do a double date for dinner? It's, it's stuff like that because, here's another cliche. It really is a people business. And I just enjoy spending time and learning about people. So not everyone is that way, but if you can put on that hat when dealing with brokers and not always see it as a means to an end, but as just a relationship that's going to build over time. And occasionally it might result in a really big windfall for you, but if not, if you enjoy the process, I think that's a winning strategy.
I mean, just add my 2 cents on the question. We go through brokers for a couple of reasons, always through brokers, but brokers spend their time, the large amount of their time building relationships with owners, and so the benefit of the broker is you don't have to make hundreds and hundreds of calls to owners to find a deal because the broker's doing it for you, but on the flip side, right now things are so competitive that, are there a lot of deals out there? I don't know, and Phil, we're right with you. We've closed on one property in 2021. We've put a lot of offers in. And, a lot of times we're putting our offer in like, this is the most that we can pay for this, and coming in second, third, fourth, or sometimes fifth place. So, but yeah, for the immediate future, we're still going to be leveraging brokers. But here locally, I am trying to meet as many owners of properties in my local area so I can hyper focus on this area too. And that hopefully will eventually land me some deals just like it is with Phil.
Great. It's good advice, guys. Thank you. So one more question, Phil, I just out of curiosity here, you mentioned earlier that your second deal was a grand slam. Do you want to take us a quick overview of what happened with that one?
Sure. So we'd proved concept with the 13 unit, right? I'm still working as a real estate agent. I'm still flipping houses, but I want more of this because the rent checks had miraculously continued to arrive for the months after I purchased that one. And I couldn't believe it. I'd read the books, but I was convinced something was going to go tragically wrong and I was going to lose my shirt. But no, like the rents kept arriving. I kept going to the bank and I'm like, this is great. How do I do this? But like a lot bigger. So I started getting on like LoopNet and Crexy and reaching out to the various brokers outside of the MLS land that I was, kind of shopping in when I started, and, opened this whole nother universe. And again, it was about being sort of a master of valuation. There was a portfolio of 108 apartments in a neighborhood I knew very intimately. And it was priced at what I thought was a pretty good basis. It's like 5.5 million or something like that for the 108 units. And so I called to book a tour, and long story shorter, I found out that there had been a couple contracts that had fallen through due to very large retrades because the property did have a lot of deferred maintenance. So I explained to this broker that we were flippers, class A contractors, had a property manager on my team, and that if they would accept the price that worked for us, that, we absolutely would not retrade. I put it in the contract and did big bold letters. Not that it necessarily would have held a ton of weight with a refundable EMD, but I included it and was able to negotiate it down to a price of 3.95, which was just a screaming deal in that market. And so we spent about 750,000 on CapEx, and today the project's worth a little bit over 9. So
Wow.
yeah,
Nice.
that's a good one to have a JV with 3 other guys, is quarter partners each.
Yeah, I was just wondering, are you planning to sit with it in cash flow for a while? Are you going to sell it anytime soon?
So that's another thing when it comes to like partnerships. It's good to understand everybody's motivation. I was very blessed to surround myself with people that were a lot further down the path than I, a little older than I, and all that good stuff. But our goals are a little different. So to answer your question, our intention is to hold that one forever, just because we're never going to see that basis again. The cash flow is fantastic. If we ever needed it, we know that we've got some equity to draw on. If it was up to me, if I owned it myself, I would get out of it, because there's just a ridiculous amount of equity in there, especially in the current market, that I could redeploy into something that was a lot more passive, bigger, to have a larger and better capitalized, mortgage to pay down. So that's what I would do. But it's a partnership and everyone gets a vote depending on how you set it up. And it seems like the other partners want to just hold on to it, let it do what it does, and we'll revisit it in like 10 years. There's nothing wrong with that. But when you're a little newer in your investment journey, you want, to really make every dollar of cash and equity you have at your disposal work as hard as possible. And, if it were up to me, I would have those dollars working a little bit harder. But when I brought these people onto my team, I ceded 3/4 of the control. So I'm along for the ride, basically.
Yeah.
Sure.
It still sounds like a great, going from about 5 million, less than 5 million all in, to 9 million in a couple of years. You're right. That's a screaming deal. That's a grand slam right there. But you do bring up a good point. When you go into partnerships, you got to make sure that everybody has, the same goals. And that's really part of, an answer to your earlier question, Adam, about partnering is, one thing you want to make sure is you have the same goals and same outlooks. Otherwise, and it sounds like you're good with where you guys are right now, but there could be situations where one person really wants to go a different direction than others, and it becomes ugly. But making sure you have similar goals really helps from the beginning. So,
and it, just to clarify, it's not like that. It's just, if it were up to me, I would go take a loan of, say, 70 or 75% of our current value. And that's like a nice little chunk of cash to go in to buy something new, and it's all tax-free, and that's great.
Tax-free to refinance. Yeah.
But there's also something to be said about being extremely low levered with a great loan and just letting it do what real estate does.
Yeah.
So it's just different flavors, right?
Yeah. I've definitely heard of horror stories in the JVs, but you're in a good spot. I think that's you're in a really good spot. So anyway, Adam, back to you. Do you got any other questions?
Well, I guess another question would be related to creative financing. I think you mentioned earlier you've done some where seller carry back the note. Any interesting tips on how to get seller financing or any creative financing in general?
So that one kind of dropped into my lap. I've done a couple other seller financing deals, and the sellers tend to be older, and they tend to have a lot of tax exposure if they do a traditional sale. So it's sort of a calculus to, how do I get them a cash flow that's similar to what they were receiving on their poorly managed mom and pop rental, and how do I actually make it work for me as a bridge loan that didn't need an appraisal, that didn't need a lot of expensive third-party reports, that I didn't require as part of my due diligence, and a lot of lender fees. So then I, go ahead and fix the building. We did a 20-plex with that exact same kind of
Mhm.
idea. We bought it for 975. We put 100 down, so very high levered. The seller carried what, 875 at 4% interest for like 3 years or something for us.
Mhm.
But in the second year, we went and sold it for like 1.55. So like,
Nice.
that's a good result.
Yeah. I mean, that's like 600% return. I mean, no big deal. No big deal.
So I think we put 150 into it.
Oh, okay. So
So
we're
I
down to
think we were,
300%.
yeah,
Yeah.
exactly. Yeah, I was
Yeah.
really,
It's a
I'm
terrible deal.
embarrassed. I'm humiliated. But the key is to understand what's important to the seller though.
Mhm.
And a lot of times it's price. So if they want a high price, great. Like I want you to
Mhm.
carry 90% at a very reasonable interest rate. Then all of a
Mhm.
sudden you can go a couple years down the line and you've paid off some principal, you've done different things, and it makes sense for you. The cash on cash will be where you need to
Yeah.
be, and especially if there's a value add component. But
Yeah,
seek to solve their problem first is the succinct answer of how to do seller financing.
I'm working on something like that right now with one of my friends locally. It's not a Four Oaks deal. It's a Brian Briscoe deal, but there's a seller who, and Phil just, described him perfectly. Older gentleman, has a high tax liability if he sells, and he wants to do an owner carry. We talked with him on the phone, and there's a lot of give and take. There's a couple of things that he wants that we're not happy with, but if we can do a little bit of give and take to make it work for both of us, it's going to be a really, really good deal. But back to what Phil said, it's just a matter of figuring out what they want and seeing if you can give a little bit on what you need to give them what they need just to make it work. So in this case, without letting too much information out, the owner wants 5 to 10 years of guaranteed interest. So that's typically prepayment penalty is kind of what he's looking for. So, if we can make it work and to help him get, his guaranteed income for that 5 years, then, and make it a good deal for us, it'll work perfectly. But, yeah, I think the people I know that have done seller carries, Phil nailed it on the head. People with tax exposure, generally, a little older than we are, a little more gray in the beard than, maybe I got. But that said, we're about out of time now. So one question for each of you. And, Phil, I hoping to hear a little more about Mission First, but, how can people learn more about you, and then tell us about Mission First?
Awesome. I can't believe how fast this flew by. This is fun. We could sit here for 3 hours. You know what I mean?
Yeah.
So yeah, I mean, if anything I said resonated with you, and you want to kind of get into my universe, missionfirstcapital.com is the place. Mission First Capital is the first of its kind Regulation A+ fund backed by real estate that's 100% veteran owned and operated. And my goal here is to level the playing field with, within private equity. It bummed me out as, I continued to kind of ramp up my portfolio, that all of my offerings, my military, brothers and sisters, they were excluded because they didn't have the net worth, most likely, of $1 million, or, the income of a couple $100,000 a year for, 506C accredited offering. And even if I was going to do a 506B and I had a $50,000 minimum, like that's a lot of loot for, a young enlisted guy. So, the Mission First, we rapidly reduced that minimum investment under Regulation A+. Anyone can invest with us so long as it's not more than 10% of their net worth or their annual income. So the 98% of the population that was excluded from participating in private equity backed by real estate, guess what? You're welcome here at Mission First. And yeah, we'd love to have a conversation. So missionfirstcapital.com, check us out, and hopefully we'll see you over there.
Yeah, I love it. Being open to the masses. And 506Bs still have a hurdle to get in because there's always that minimum investment. Part of the reason we've never done a 506C as Four Oaks is because we want to open to more people. And I think funds like this, expand it even further, so, much lower, you could say 5,000 minimum investment.
5,000.
Okay. Yes. Five.
Could I
I
add
mean,
one more thing, Brian, that I
yeah,
forgot?
absolutely.
That's
Yeah.
pretty important, especially to a lot of your listeners who are cut
Mhm.
from, our type of cloth. I take the 100% veteran owned and operated thing pretty seriously. I'm sourcing deals in Hampton Roads, Virginia. That's my place,
Mhm.
right? But my big, hairy, burning goal is to create 1,000 veteran-owned small businesses in the next 10 years. So
Mhm.
that's real estate as the core, and then to branch on from there. But where we're starting with Mission First Capital is if you're a veteran that comes up with a grand slam deal like the one we just talked about,
Mhm.
instead of going in, rallying up a JV like I did or like Brian did, come to us at Mission First Capital, and if it fits our box, our wheelhouse, we will JV with you on that deal if you're a veteran or active duty, and we'll take care of a lot of the stuff that is hard to do. The equity, first and foremost, the senior debt, the accounting, the legal, the marketing, the investor relations. You just got to focus on getting a deal that's legit, looking in on the property manager, bringing the KPIs in that we agree to, and sort of the benchmarks, and you can potentially earn more equity than you would have if you did your own syndication. So
yeah, I think that's a huge plus for a lot of people. You basically, they find the deal meets your criteria, they bring it to you, and you guys negotiate,
we
how things work.
facilitate.
Huge.
Yeah,
Absolutely.
yeah.
All
But
right.
you can still claim it. It's still your deal. We're just
Yep. Partnering.
helping,
Yeah.
partnering. Yeah.
So sweet. All right. So I'll make sure that information makes it to the show notes. Missionfirstcapital.com is where that's at. Adam, same question for you. How can listeners learn more about you?
You can reach out to me on LinkedIn. My name's Adam Lacey, Lacey, and you can email me, adam@golddriveninvestments.com. I'm sure Brian will drop it in the show notes.
Yep.
Love to hear
Absolutely.
from you.
All right. Hey, well, thank you too much. Thank you too for coming on the show today. Phil, like you said, I could have talked with you guys for a long time, but my clock's telling me that we need to move to something else right now. So appreciate your time, guys.